Welcome to today's podcast, where we'll explore a particularly important yet often overlooked aspect of the trading journey: yourself, your inner limits, and how to overcome them. Before we begin, if you find this content helpful and would like to join us in future podcast episodes, please hit the like button to show your support and subscribe to the channel so you won't miss any valuable insights. Don't forget to turn on the notification bell to stay updated with the latest videos. Your support is our greatest motivation to continue delivering high-quality content. In the volatile world of finance, where every decision can lead to either major victories or significant losses, many believe the key lies in trading strategies, technical analysis, or advanced tools. But did you know that what truly sets a successful trader apart from a struggling one is not just what they know, but how they face themselves? In other words, success is not just about understanding the market, it's a journey of conquering the limits within your own mind. Take a moment to reflect on your last trading failure. What really happened? Maybe you misread a trend or were caught off guard by unexpected news. But if you think more deeply, you'll likely realize that your emotions, anxiety, greed, or even envy when seeing others win big, played a role in your poor decision. This isn't just your story, it's an inevitable part of every trader's journey. However, this doesn't mean you're destined to fail. In fact, the most successful traders in the world started from similar setbacks. What sets them apart is their ability to overcome themselves. They don't just learn how to read charts, they learn how to read their own minds. They train to control their emotions, build discipline, and overcome the bad habits that once caused them to fail. Today, we're going to delve into the 4 biggest internal obstacles that often prevent traders from conquering the market. These aren't just lessons for beginners, but valuable reminders for seasoned traders as well. Sometimes, it's the simplest things we overlook that make the difference between success and failure. Together, we'll examine each aspect, from recognizing negative thoughts like envy or self-doubt to developing habits that help you overcome procrastination, lack of discipline, and the tendency to blame external circumstances instead of taking responsibility. I believe that through the stories, analysis, and practical experiences shared in today's podcast, you'll find the inspiration to change yourself and keep moving forward on your trading journey. We all know that trading is a long game, and the most important thing isn't whether you win or lose a single trade, but how you build yourself to become a stronger and more resilient trader every day. So, are you ready to embark on this journey of self-discovery and unlock the doors to success? Let's start with the first bad habit. 1. Pettiness and envy. Have you ever scrolled through social media, opened a trading account, and seen posts from other traders flaunting massive profits from a single trade? They showcase 6, even 7-figure numbers, green charts, and captions like "easy as pie." How did you feel in that moment? Excited, inspired, or bitter? If it was bitterness, you're not alone. It's an unavoidable part of human psychology. We envy the success of others, especially when we're struggling ourselves. Envy is a natural reaction, but in trading, it's a silent enemy that subtly destroys your judgment and leads you to make poor decisions. I once heard the story of a young trader, we'll call him Steven. Steven started trading with big aspirations and determination. But instead of focusing on building his skills, he spent most of his time browsing social media, looking at posts from other traders. He admired them, but deep down, he felt envious. Every time he saw someone flaunting big profits, Steven rushed into the market, hoping to catch up with their wins. But life isn't a dream. Instead of winning, Steven suffered repeated losses. He began to lose patience, blame himself, and eventually, blame the market. He told me, "Maybe I'm just not cut out for this." But the truth was different. Steven had let envy drive him instead of logic and strategy. He failed to realize that what others showcase is just the tip of the iceberg, their success. The failures, the blown accounts, the sleepless nights. Nobody talks about those. Envy is a sophisticated emotion. It makes you feel inadequate, not smart enough, not quick enough. It makes you question yourself, wondering if you're doing something wrong. But here's the important truth: envy is not reality. It's just a distorted mirror, magnifying your weaknesses and obscuring your strengths. In financial markets, where every decision is critical, letting envy take over only leads to mistakes. When you're envious, you lose objectivity. You enter trades not because of clear opportunities, but because you want to prove something, to yourself or to others. As one seasoned trader once said, the market doesn't care about your emotions. The market operates on its own rules, unaffected by your envy or any other emotions. How to overcome envy. So how do you overcome this feeling? How do you focus on your own journey instead of chasing after others? Here are 4 ways to rise above envy and pettiness. 1. See the bigger picture. Remember, what you see on social media is only a small part of the story. Nobody showcases their failures, their blown accounts, or their sleepless nights due to stress. Success never comes easy, and the traders you admire have undoubtedly paid a hefty price to get where they are today. 2. Build your own path. Instead of copying others, focus on developing your own trading style. Nobody understands you better than yourself. Take the time to find a method that suits you, learn to manage risk, and discipline yourself. 3. Turn envy into motivation. Instead of letting envy hold you back, transform it into motivation. Let the success of others serve as a reminder that you can achieve it too, as long as you stay committed to your journey. A successful trader once told me, if they can do it, I can do it too. All I need is time and patience. 4. Reflect on your own success. Don't just look at others. Take the time to reflect on what you've achieved, no matter how small. Every time you maintain discipline, every time you follow your trading plan, it's a victory. Remember, big success is built from small, consistent steps. Envy is a powerful emotion, but you don't have to let it control you. Remember, in trading, your greatest adversary isn't the market or other traders, it's yourself. Focus on your own journey, train with patience, and you'll see that with each passing day, you move closer to your goals. When you learn to overcome pettiness and envy, you'll not only become a better trader but also a better person. And that is the true definition of success. 2. Inconsistent effort. In the journey of financial trading, one of the greatest lessons traders must internalize is not just how to analyze the market, but also the art of perseverance. It's not about bursts of effort or short-term enthusiasm, but about sustained, consistent effort over time. However, many of us, even when starting with high levels of determination, quickly lose momentum because of a lack of consistency. They make plans, set goals, but only execute half-heartedly, never seeing them through. The result is failure and disappointment. Let's take a look at the story of crocodiles in the Mara River. When herds of wildebeests approach the riverbank, the crocodiles don't immediately lunge out. They lie motionless, patiently observing, waiting for the perfect moment. Only when a weak or isolated wildebeest comes within reach do the crocodiles strike with lightning speed and precise power. What makes crocodiles the ultimate predators is not recklessness or overenthusiasm, but their patience. They don't waste energy on vague opportunities. They act only when the odds of success are at their highest. But what would happen if they leapt into the water without a plan? If they aimlessly swam around the river without sticking to their strategy? They would surely tire themselves out and catch nothing. Half-hearted effort is a major trap that many traders fall into. They start with a trading strategy, but as soon as they encounter a few initial losses, they immediately doubt their method. Instead of patiently refining and sticking to it, they hastily abandon it and jump to another strategy. As a result, they never spend enough time truly understanding any single method. They become trapped in a cycle of failure, constantly experimenting but never following through. This doesn't just waste time and money but also erodes their confidence in themselves. 3. Blame and lack of responsibility. Losses in financial trading are inevitable. It's the natural essence of the market, ever-changing, unpredictable, and sometimes full of risk. But what distinguishes a good trader from a failing one is not the number of losing trades they have, but how they deal with those losses. When you constantly blame the market, brokers, or any external factors instead of yourself, you are effectively shutting the door to improvement. Why do we blame others? Simply because it's easier. When losses occur, pointing fingers at external factors helps us avoid the painful realization that we were wrong. But this is merely a short-term defense mechanism. In the long run, it robs us of the opportunity to learn and grow. Remember, the market has no emotions. It is neither biased nor deliberately working against you. It simply operates according to its own rules. If you lose, it's not because the market is unfair, but because you don't fully understand it or lack the discipline to follow your plan. Successful traders understand that losses are the cost of participating in the market. They don't view every losing trade as a failure but as a lesson. To achieve this, they must learn to acknowledge their mistakes. Here are the steps to accept responsibility and improve. Every time you lose, ask yourself, what could I have done differently to improve the result? Don't criticize the market or brokers, as that won't help you control the future. Instead, focus on factors you can change, such as your analytical skills, trading plan, or mindset. A good trader always keeps detailed records of each trade, including the reasoning behind it, market conditions, and the outcome. When they face losses, they review this data to identify the cause. Did they break their own rules? Did they fail to notice a market shift? These questions help them turn failures into lessons for improvement. Acknowledging mistakes doesn't mean berating yourself as useless. Remember, mistakes are inevitable in trading. The important thing is not to let them prolong feelings of disappointment, but to turn them into motivation to strive harder. Forgiving yourself is the first step to moving forward. Look at the most successful traders. They are not perfect, but they are the ones who know how to take responsibility. A seasoned trader once shared, "The market is never wrong. If I lose, it's my fault, and it's also an opportunity for me to learn." Their self-control and responsibility have helped them navigate the toughest times. Not only in trading but in life in general, blaming others never yields good results. It traps you in negativity, while taking responsibility helps you become stronger and more mature. If you want to succeed in trading, start by taking control of yourself. Losses are not failures but opportunities to learn and grow. Don't waste these valuable lessons by blaming the market or anyone else. Remember, the biggest enemy of a trader is themselves. When you learn to admit mistakes, analyze the causes, and improve from your failures, you will see yourself progressing every day. Success in trading doesn't come from avoiding losses, but from how you handle them. Be someone who takes control, takes responsibility, and always strives for improvement. The market is a tough teacher, but if you're willing to learn, it will teach you the most valuable lessons to achieve financial freedom and personal fulfillment. 4. Stubbornness for the sake of pride. In the world of financial trading, where every decision is measured by profit or loss, self-esteem and pride can become the biggest obstacles. Pride, a concept tied to one's self-worth in the eyes of others, becomes a dangerous enemy when applied to trading. By clinging to pride and refusing to admit mistakes or sticking to ineffective strategies, you're not only protecting your ego but also destroying your trading account. Stubbornness for the sake of pride stems from ego and the fear of being judged. We often tie our self-worth to our decisions and their outcomes. But in financial trading, this is extremely dangerous. The market doesn't know who you are or care how many times you've won or lost before. It operates on its own rules, and those who try to fight it will inevitably be punished. A stubborn trader often refuses to cut losses because they are afraid to admit they were wrong. They also refuse to change strategies because doing so means letting go of what they once believed in. What they fail to realize is that this stubbornness is the very reason for their escalating losses. In contrast, successful traders have no qualms about admitting mistakes. They understand that mistakes don't define their worth. How they handle those mistakes is what truly matters. Here are some lessons to help you overcome stubbornness and move towards success. A losing trade doesn't mean you're a bad trader, and a winning trade doesn't make you a genius. Treat trading as a game of probabilities, where wins and losses coexist. When you don't tie your self-worth to the outcome, you'll find it easier to make objective decisions. Cutting losses is not a failure but a part of the trading plan. A successful trader understands that protecting the account is more important than proving they're right. Set clear stop-loss levels and follow them with discipline. This not only minimizes losses but also helps you maintain composure during tough times. The market is always changing, and you must adapt to it. A strategy that worked yesterday won't necessarily work today. Stay open-minded, willing to learn, and ready to experiment with new methods. Successful traders don't cling to a single strategy. They continually refine their approach to align with market conditions. Admitting mistakes doesn't diminish your worth. On the contrary, it shows you have the courage and confidence to learn. Remember, truly skilled traders respect humility and are more inclined to help others rather than judge them. Look beyond trading. Stubbornness for the sake of pride isn't limited to the financial markets, it also appears in everyday life. We refuse to change jobs that no longer suit us, refuse to apologize when we're wrong, or hold on to broken relationships simply to save face. But just like in trading, if we refuse to change, we'll remain trapped in a cycle of failure. Clinging to pride may bring temporary comfort, but in the long run, it will drag you deeper into failure. Success in trading requires the courage to admit mistakes, the flexibility to adapt, and the humility to learn. Remember, your value doesn't lie in always being right, but in how you handle being wrong. Let go of your ego, prioritize long-term benefits over temporary feelings, and strive for continuous improvement. When you do this, you'll not only become a better trader but also a stronger and more confident person in all aspects of life.